Andrew Left, the infamous short seller of many retail investor favorite stocks, has just been sued by the SEC this past week, which you've likely seen at this point, for market manipulation. He's infamous for his shorts on Tesla, GameStop, and Palantir when it was getting listed. In this video, I'm going to bring to you everything as it relates to PLTR. What did he say then? Was he right or wrong? And what does it mean for the future? But first of all, what is my take on short sellers? We know what Alex Karp thinks of them. As he said in many interviews, he wants to bankrupt them. Anyone betting against Palantir is sure to get steamrolled. Personally, I think short sellers are an important part of the market, being able to bet against a stock. However, where I draw the line is manipulation. You should always be able to take the other side of a trade, otherwise the market would be way out of balance, but you should not be able to lie against or otherwise manipulate the stocks in which you are trading. So I say, if you want to short Palantir or any other stock, I don't care, go for it. But in this video, we're going to be explaining what went wrong with Andrew Left in his short of Palantir and overall his case that may land him in jail. Now, this video is not meant to be slanderous against him, but it is a very serious situation and one that Palantir investors may take pride in, having battled through some of that FUD and coming up victorious on the other side, at least more recently. So as I've said, we'll be getting into the details, what Citron Research, which is Andrew Left's firm, said about Palantir and what it actually did to the stock and what it means for the future. But first of all, I want to bring you a message from my partnership with Visual Sectors. So before we get into all of that on Citron Research, Visual Sectors just put out an awesome video on Boeing's history and current challenges. Now, this is a company that we've talked about recently on the channel that's really failing in all of the ways that Palantir is succeeding operationally, being well positioned for the future. And this video covers the company's journey from its founding in 1916 to its recent struggles with the 737 MAX crisis and production issues. And the video provides a balanced look at Boeing's impact on aviation and the problems they're facing now. And you can even read between the lines on how Palantir could be helpful in that regard. It explains how these issues are affecting not just Boeing, but the whole aviation industry and even the US economy. What I found particularly interesting was the discussion of Boeing's recovery plans and the challenges they face in rebuilding trust. The video does not sensationalize things, which I really appreciate. It just presents the facts clearly. So I definitely recommend giving this video a watch. It's truly informative without being too technical, and be sure to subscribe to the Visual Sectors YouTube channel. So with that said, let's get back to what's going on here with Andrew Left with this clip from Bloomberg.
So the SEC and the Justice Department also, they're both alleging that Andrew Left a number of things, but most notably, he came out with calls both to the long and short side, initiated price targets, and loaded up on positions before unveiling that research. The stock would move, and then he'd quickly close the positions to profit very rapidly. So he'd make bets not only on the underlying stock, but also use options, basically saying, at least when you look through the Justice Department press release, saying that he wanted to make fast, easy money using those mechanisms.
Yeah, it's pretty amazing. He sometimes suggested that stock prices would fall by 50% or more, but then actually closed his positions after share prices had only moved a couple of percents. That's according to the indictment. Tell us a little bit more about Andrew Left, though. I mean, what do we know about him and what's he known for?
He's known for being kind of bombastic. He did actually announce back in 2021 he was on the kind of receiving end of the wrath of the GameStop movement. So he said he was no longer going to make public short calls because he had built out such a vast following with the likes of betting against Valiant, among a broader range of investments that he kind of ended up being right on. But when you look at kind of what he's done and when he kind of started backpedaling 3 years ago, that also was when the SEC and Justice Department started investigating short sellers, some of their relationships to hedge funds. So he's been under the microscope from a regulatory standpoint for quite some time, along with a number of other players in the space.
But some of these allegations have to do with his longs as well, right? It's not all about him being a short seller. And when it comes down to it in the indictment, they're not suing him for shorting stocks. It's really about the way that he publicized his calls and then acted in his own trades.
Exactly. Reading from the SEC press release, they list an example that he said he would stay long a stock until the price hit $65, when in fact, according to the release, they immediately began selling the stock at $28. So coming out with these calls, loading up on positions, basically using his stature on social media, whether that's X or also going on TV and talking about positions, and then quickly profiting from them. According to some of the documents from the Justice Department and the SEC, he basically would put limit orders out. So he would close out those positions even if it kept going or kind of potentially
In the parlance of our times, that would be called a pump and dump scheme.
Yes.
Well, even more than that, he was setting up apparently fake websites, wasn't he? To what extent did this go to? And is this a one-off? Yes, perhaps they found this because of that short selling investigation, but it doesn't seem like every short seller is out doing this.
No, well, there's a lot of skepticism around short sellers, and that's kind of to Matt's point. Is it misaligned kind of allegations where you come out with kind of this call that a company should drop 60% and you're going to hold on to that short bet, or do you close out your position when it drops 10%? So when you look at some of the findings, again, the SEC document saying they found these alleged bait and switch tactics that netted left in his firm $20 million. So not only did he have those, according to the filings, those accounts to help promote some of his calls, there's also potentially taking backdoor payments from hedge funds that's being alleged in some of these lawsuits, that there was partnerships with something around balance sheet.
Is there anything that we can extrapolate out from what we're seeing in this very specific case, these allegations, to the broader short selling industry? Because you know pretty well that it seems like it's been a dying breed. We've seen less short sellers. A lot of them have gone underground. What's next?
No, I think that we're going to be closely watching to see if other prominent names that were part of these investigations are going to be facing similar lawsuits. Because as you mentioned, it has been a dying breed. You saw Jim Chanos pulling out.
So with that background out of the way, I want to show you this SEC filing that alleges the complaint against Andrew Left and Citron Capital. So this lists many stocks here, some of which I am not familiar with, many of which I am familiar with. You'll see the list here. And what we're going to do is just go to the Palantir section. So this is Palantir, November 27th, 2020 is the date they're focused in on. Here's the section, which is actually third under Appendix A, false and misleading statements by Left and Citron Capital. Some of them are long tweets. You can definitely manipulate to the upside. I would say it's definitely harder to do that, but it's definitely wrong nonetheless. On Palantir, they took the short attack angle, which we made a video on 3.5 years ago, almost 4 years ago, calling this potential market manipulation. This is what they said. What a run the past month for all. But as traders looking for short exposure, Palantir is no longer a stock, but a full casino. Does not take a ball of crystal to know this will fall back to Earth. Shorting with a $20 2020 target. And other statements concerning defendants' positions, stated price target and recommendation with respect to PLTR. All of this said, there's definitely more to the story that has not been made public with that last sentence here with respect to what manipulation occurred, because obviously it's totally legal to share your views on any stock, whether you're betting one way or the other. But what's not legal is to deceive others about your actions. And this is what the SEC is alleging for Andrew Left and Citron Capital. Left and Citron were publishing recommendations to buy or sell, in Palantir's case, stocks with price targets, where he says $20 2020, and then quickly trading in the opposite direction of his published recommendations to profit from the resulting price movements. So that's the part that's not allowed. You're totally fine to put out price targets. And the SEC is saying he made $20 million in illegal trading profits through this scheme, which involved 23 target companies on at least 26 separate occasions. So the SEC is seeking permanent injunctions, disgorgement of ill-gotten gains, civil penalties, and other relief. So this is very serious. Definitely a victory for the Palantir bulls, hoping that a lot of this manipulation is now behind us, with the SEC finally taking some action against these short sellers that truly hate and are trying to take down in illegal ways great American companies. So I'd love to know your thoughts in the comments. Until next time.